Welcome back. Hope you're having a good morning then. Well, plenty of stocks to discuss. Pramod Amthe, Head of Institutional Equity Research at InCred Capital, joins us on the show. Hi, Pramod. Morning. Thanks so much for joining in. Well, let's talk about a couple of stocks. NMDC, there were hints that there's going to be a price increase. In fact, Citi had written a note earlier in the week that they're expecting a 1,000 rupees price increase in the coming few months. They've gone ahead and done 200 out of that. What's your view on the stock? As a house, I think you're fairly positive on iron ore prices.
Yeah, we are positive on iron ore versus the steel, and NMDC remains our preferred pick. The tailwind on the commodity is relatively better, along with the valuation comfort. So hence, it remains our preferred pick in the overall commodity space.
Okay, that's on NMDC. Pramod, hi, good morning, and thanks a lot for joining in. There's so many IPOs, right, that are opening, that are currently open, doing very well. Tata Tech, of course, tops the list, but there are so many others like Gandhar, etc. From that entire pack, is there any company that you would buy post-listing, assuming the growth to pick up over the next couple of years?
So the IPO note which we released on Tata Tech remains our preferred in the current set of things. Post the plant visit and the management interaction, the comfort definitely comes through for the, I would say, in spite of having a high concentration for Tata Motors and GLR, the expected diversification from the same and the capability can be extrapolated to the other clients, and relative valuation discounting can be covered up in the coming year. So that remains our preferred pick amongst the IPOs, expected IPOs in the coming weeks.
Pramod, good morning, Prashant here. To step back a little bit, what's the overall view on the market from here?
So broadly, we are of the view that it will be a range bound till December, as the decent result season will be overshadowed by external volatility, FI selling, and the election expected results in the coming weeks. Broadly, in terms of year-end target, we continue to maintain a 7% upside to our Nifty 50 target of around 21,100, as the valuation comfort continues to remain there.
Year-end, you mean
March.
Not this year? By March, okay.
Yeah.
You said range bound. Okay.
For the financial.
No, got it. Now, by the way, are you getting a fair bit of questions from clients, etc., about the state election results as we head closer to the, next Sunday we get the results?
No, I think there is, considering the way the government is reacting for some of the freebies, obviously there are concerns how the policy will pan out, even though the state elections per se may not be having a direct influence on the full year or the central elections, but the government policy will have a repercussion from these results. So that's what the market is looking forward to.
Okay. All right. Pramod, I wanted to ask you about one of these outperformers, AAR Industries. What a big outperformer it's been. I had a chat with the management earlier this year, and they sounded very optimistic about what's on offer for the entire industry and the sector as well. What's your view on the stock? It's no longer cheap, but the offer and the potential is huge in this particular industry. Your view on it? It's going to be doing a QIP, raising 1,000 crores odd. Your view on the stock?
Sorry, we don't officially cover the stock, and hence wouldn't like to put my comments on that.
Got it. Okay, because that could be one of those stocks after the kind of run that we've seen. I think in the last 3 years or so, it's up more than 10 times, I think so. But let's talk about another stock. Indian Hotels, you have some negative news flow with regard to data breach. And that as well has been a big outperformer. On ground, we know the kind of demand, the kind of traction you're seeing for hotels. Room rates are moving up, occupancies as well are moving up. If there's a dip today, would you look to be a buyer?
I think broadly the services and the return back to the normalcy on the service sector has been much better than anybody expected, and more so on the travel and tourism. And that's getting reflected in all the across stocks. So being the largest in that space, that definitely draws an attention for the Indian hotels.
We're also going to head into a discussion now to talk about the auto sector and the kind of moves over there. But before we do that, Pramod, I wanted your thoughts on any of the auto stocks. Is there something that still stands out where valuations are reasonable?
I would say in terms of our preference, post the voting for Maruti comes as a topic for us, followed by Bajaj and Ashok. So the recent movement of stocks, if you look at, Maruti and Ashok haven't participated big time. Whereas if you look at the broader their market share wins and the medium-term outlook provided by both the managements for the 3-year and 5-year outlook looks pretty impressive, both in terms of the broader macro tailwind and the sector tailwind and their product actions. So these two are where we feel is a relative mismatch in valuation versus the future delivery promises.
Pramod, let's actually talk about a few areas where you guys have coverage on and where you've changed your recommendation. SBI Cards is one where you have a reduced rating. Is that on the back of the recent RBI sort of curbs which have been imposed, not curbs but kind of speed breakers imposed on unsecured lending?
Yeah, exactly. I think it was known about, or it was expected to come through, but I think the extent of increase for cards has been much steeper, and and hence the requirement for the capital will be almost to an extent of 4%, if I'm not wrong. So in that sense, it will be most impacted, and hence we have downgraded directly from a add to a reduce, as clearly the RBI direction seems to be that go slow on growth or be very prudent on growth, and the more capital required to assimilate the similar growth. So that leads to a concern and hence a downgrade.
Any other sort of names which, I mean, does one need to become more selective in the space now after what the RBI has done? And of course, we heard from the governor, by the way. He followed it up with that speech where he pretty much sort of addressed this very issue, which
Sure.
also has gotten a fair bit of publicity. But I mean, from the space, from a stock perspective, any other implications apart from SBI Cards?
So interestingly, in this correction, we have upgraded SBI, the main SBI, into a high conviction list ad rating, which basically, even though they have a high exposure to the consumer along with ICICI in the space, but we clearly see the risk reward turning favorable for them, broader economy doing well, and that the valuations are substantially in their favor. So that gives us a comfort to, we had ad, but make it a high conviction ad rating, as the risk reward is relatively favorable in that space.
Pramod, the insurance space here in India is underpenetrated and there's a big scope out there. Some of these stocks actually didn't perform that much, but in the last 1 month or so, some of these insurance names have come back. What's your take on the sector, and what about LIC? Post-listing, actually, people have forgotten about it. And the government says that, till it's closer to the last IPO price, then only they'll come ahead and divest it. I don't know whether that's going to happen. But what's your view on the insurance space, and particularly on LIC? Valuations are supportive, so I ask you.
No, I think if you look at the last couple of quarters, LIC is a stock where we have seen earnings upgrade coming through, and post the overhang of the government policy on the way the ULIP distribution or to that extent, that is well absorbed, and the earnings cut expected is behind it. So there is some amount of relative catch-up which is happening in the space. And I think the new products being launched to fight out the overhang of the old products seems to be bringing some stability into the space, and that's a comfort we are looking at.
Pramod is still with us. Pramod, thanks for waiting. I think we're hitting pre-open as well. I just wanted to run through a few more names by you. You guys had a report out talking about your preference. I mean, you were asking clients to buy city gas distribution companies, and I think IGL there is your top pick. You want to tell us why?
So basically, the priority for gas is clearly from the government to distribution, expansion of distribution, and especially where we were concerned about the global prices may have an impact, that is completely behind, as the allocations have been able to come through. So in that context, the consumer demand is reviving in a much aggressive manner. Concerns being completely behind, that gives us a bigger comfort in overall space, and especially that's where the IGL stands out. And it has been the least impacted relative to the recent policy announcements.
Just in that same similar line, these oil marketing stocks have been having a great November. I mean, HPCL is up 30% this month. BP is up some 20, IOC is up 15. What's going on there, Pramod, if you have coverage?
I think even though we are broadly overweight on OMCs per se, but having said that, the valuations have been pretty low. So that gave us a comfort, and the oil momentum coming back. But beyond a point, they remain a trading stocks. We wouldn't put out a substantial long on them, considering the overhang of the government policy continues to remain there, as the prices haven't moved up anything significant. and moving that into extrapolating the current profitability to a medium term becomes a risky, and hence on a relative valuation it looks attractive, and that's where we would like to play it around than a substantial build on them.
All right, Pramod, thanks so much for stopping by and giving us your view on a whole host of stocks. Wishing you a good Friday and then a rocking weekend ahead as well.